The best of Money Matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. I'm Hongbin Jeong. Now, investing in data centers has become an increasingly attractive opportunity as the demand for digital infrastructure continues to surge. With the global data center market projected to reach $4 trillion by 2030, driven by factors like cloud computing, AI, and enterprise digital transformation, data centers are positioned as a critical asset class. Now, as regions like Asia-Pacific leading the charge in investment and expansion, understanding the evolving market dynamics, the growth projections, and emerging trends is essential for those looking to capitalize on this rapidly growing sector. So to find out more, joining me now is Fitzalan Howard, who's the head of data centers at Asia-Pacific of Knight Frank. Fred, welcome to the show.
Thanks very much. Great to be on.
Great to have you on. Fred, global data centers transaction volume saw a 118% increase back in 2024. What's driving growth in the data center sector?
Thank you. So effectively, growth in our sector can be attributed to two things. I mean, the sector's been around since the 90s, effectively. Every click, swipe and tap, on your phone or laptop ultimately needs to run through a data center. But in the last sort of 5 years, the growth is down to two things. The first is the emergence of the cloud as being the most beneficial, place to locate companies and enterprises' data. So, contrary to popular opinion, the cloud isn't, where all your data is stored in the sky. Ultimately, Microsoft Azure or Amazon Web Services or Google Cloud, for those platforms to work, they need huge amounts of data center capacity to store that data. So, what's been proven ultimately since COVID for these offices and for these businesses, instead of storing all your data on servers within your office buildings, outsourcing that to companies like Microsoft and Amazon is far more cost effective and far more flexible. And that is driving immense growth in terms of developing these data center assets. That's the first element. Secondly, 18 months ago, we saw the emergence of ChatGPT, and again, for AI large language models to be trained and to be distributed to populations, huge amounts of data centers are required. Big buildings full of NVIDIA chips training these models is what allows them to be created. So, that's ultimately what's driving the key growth in our sector and will continue to do so over the medium to long term.
Okay, and it looks like Asia-Pacific is leading that growth, capturing $15.5 billion in 2024 and accounting for 70% of cross-border investment in data centers. Why is APAC such a focal or focus point at the moment, Fred?
Exactly. I mean, it's great to see such interest in the Asia-Pac data center market. Historically, a lot of the capital flows were, Asian investors looking to gain exposure to the American and European data center markets, which is where the sector ultimately sort of started and developed. A number of these global investors are now targeting Asia because, effectively they see this supply to demand dynamics within the region as very, very promising. So, 2/3 of the world in APAC, yet ultimately the sector is very, very undersupplied here, particularly outside, the key financial hubs of Singapore, Tokyo, Hong Kong and Sydney. So, that's why we're starting to see these large investment deals happening within Asia, particularly the likes of Blackstone acquiring AirTrunk, which is, predominantly Australian, but also data centers across Hong Kong, Japan, Malaysia, et cetera, which was the biggest data center deal ever done at $16 billion. So, there's definitely a sea change in the market and people actually starting to say the dynamics in Asia-Pac are too good to ignore.
Then which markets in Asia are most exciting for you, Fred?
Where we're focusing most of our attention this year would probably be, three core markets in Asia: Japan, Australia, and India. So, Japan has always been a very, very solid data center market from a demand perspective, very technologically advanced society, alongside Australia as well. The key things to talk about with these two markets is NVIDIA export controls. So, acquiring access to these, high-grade NVIDIA chips in order to train AI models within data centers got a lot harder with the outgoing Biden administration and the laws around procuring these chips. So there are 4 countries within Asia-Pac that you can get unencumbered access to these chips to put in your data centers: Japan, Australia, New Zealand, and Taiwan. And at the moment, the short-term demand for developing AI data centers is going into those 2 countries that I mentioned earlier. So that's where we're seeing a lot of demand at the moment. And finally, in India as well, the most populous country in the world, again, hugely sort of developing economy with a very, very young population. To support all that, huge amounts of data center capacity is requiring to be developed across mainly Mumbai, Chennai and Hyderabad. So again, we expect that market to grow rapidly over the next 3 to 5 years.
What about Singapore then? What is happening in the data center sector here?
So, since it was in 2020, the Singapore government effectively put in a moratorium on data center development. And, why was that? Ultimately, it was because there was too much power being consumed by the data centers in Singapore. So I think it was about that year they curbed it, was about 7-8% of the island's power capacity was being consumed by data centers. So it's huge amount, given these assets most people don't even know exist. Since then, on the development side, things have been relatively quiet. Apart from 80 megawatts of capacity was distributed to 4 data center operators who are currently developing those assets at the moment. So, what's been Singapore's loss has been countries like Malaysia's gain. So a lot of the demand in the sector that was targeted at Singapore is now, being developed across the border in Johor. So we've seen, upwards of 2,500 to 3,000 megawatts being developed there. So in Singapore, the demand remains high, just given the, huge ecosystem of financial enterprise here. But at the moment, it looks like the government are going to keep curtailing that as, the power situation becomes more critical.
Definitely with, technological advancements and factors like cloud computing, AI, and enterprise digital transformation, data centers, they are positioned as a critical asset class here, Fred. But what was the effect of the emergence of DeepSeek on the scene?
Yes, of course. DeepSeek had a huge impact on the sector. Like I said, AI is only really emerged in the last 18 months, and it's still, it's unsure how much capacity was going to be required. And then DeepSeek AI came out ultimately saying that you could train these models at, much less capital expense than the US cloud providers had thought. So, in the last sort of 2 to 3 months, we're starting to see from some US cloud providers, potentially a scale back in terms of their expectations in what they required from an AI perspective. Ultimately, on a global basis, there's still a structural undersupply within the data center market, particularly in those core markets. So, whilst in the short term, we're seeing there's still a bit of confusion in terms of how many data centers are required to, operate these AI large language models. In general, the outlook for the sector looks very, very positive indeed.
Well, then, who are the main investors in the space and why are they targeting data centers?
The core investors within the asset class is actually getting smaller because the scale within the market has got so great now. So, 50 megawatt data centers are now commonplace. When 4 or 5 years ago, they used to be 15 to 20, but the capital expenditure required to develop these assets, would be upwards of $500 million. So there actually aren't a huge number of investors that have that kind of capital ready to deploy into a single asset. So, the core investors these days are your, US private equity funds and global sovereign wealth funds, whether that be coming out of Asia or the Middle East. It's not, whilst people think actually it's very easy to deploy into the data center market, it actually remains very, very hard given the capital constraints of these assets. So those are the current players. The reason people love the sector so much is it spans the gap between real estate and infrastructure. So, on the one hand, you have the built environment being, real estate and long leases to secure covenants such as Microsoft or Amazon. They're very robust and you're riding the digitization wave. The infrastructure side to it is the fact that, A, the amount of capital required to develop these assets, but B, the stickiness of the income. So, these aren't like an office tenant or an industrial tenant. You're far more on the infrastructure side that actually lifting and shifting these tenants remains very, very hard. So you secure that long-term income from, some of the biggest companies in the world. In the current era when there's, certain shockwaves being sent through the real estate market, such as COVID, actually people realizing that you can have that exposure to digital infrastructure via data center is why many, many investors are looking to access this. But again, it's not an easy sector to get into. The cost basis, but B, in terms of the expertise, there's very, very few management teams out there that have a long track record of developing assets for these multi-billion-dollar tech companies, and that means that actually it still remains a very, very specialized asset class.
Well, on that note, let's also talk about the risks here. What are the main issues investors face when accessing this sector?
The core risk and the difficulty is access to power. So a small data center now will use 4 or 5 times the amount of power as a international airport. And national grids on an international scale simply aren't set up to distribute power on this level. So the waits for power in certain markets, you're looking at 5, 6, 7 years following application, at which point your building can be powered up. And then the likes of Dublin, the likes of Singapore, the likes of Amsterdam have all again put in de facto moratoriums to curb development because of concerns around the effect on the grid. So securing access to the adequate amount of high voltage power is the main difficulty. But that ultimately means that investors and developers are looking at alternative locations in which to develop data centers where there's more high voltage substations with existing capacity. So again, Johor was the big winner in this case, just across the bridge, but huge amounts of power available there. But again, the likes of Melbourne in Australia, Sydney was facing constraints. So investors are now targeting Melbourne, again, that hasn't had the same exposure to data centers that Sydney has had for the last 5 to 7 years. So one elements of the power is one thing, and then another element is actually navigating complicated planning systems. As the assets get much, much bigger, securing positive planning consents for them remains very, very tough, given the effect it has on grid network, but also ultimately that you're taking large industrial land plots and turning them into AI factories. There are going to be certain complaints from local residents, but in general, the most successful countries that we see developing assets, ones that work very much hand in hand with the investors and the operators to work out how best they can bring forward these assets, alongside pleasing local communities.
Okay, and before I let you go here, Fred, any predictions over the next 12 months for this sector?
In the next 12 months, ultimately we see, very much continued positive sentiment within the asset class. The Blackstone acquisition of AirTrunk last year at record levels, very much reinforced the value within the Asia-Pacific data center market. So we do predict more M&A deals at this level as other investors who have been invested in data center companies for the last 5 to 7 years start to think about exiting and new investors come in. I also think we'll see the emergence of new data center markets within Asia outside of these tier 1 markets that I mentioned earlier. So the likes of Malaysia is growing very, very quickly. The likes of Thailand as well, I think, is set for a very good 12 months. So we'll start to see demand spread across the region instead of just being highly focused on these financial hubs.
Some great insights from you there. Well, thank you so much, Fred, for joining me.
Not at all. Thank you very much.
Thank you. That was Fred Fitzalan Howard, who is the head of data centers of Asia Pacific at Knight Frank. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.